Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bullish engulfing pattern on Friday after the previous session's key reversal down. Prices moved back up over the combination of the flatlining long moving average, currently at 108.30, highlighted in gold on my daily chart, and the mauve-coloured, slowly rising medium moving average, currently 108.30 also. Below we have the upper trend line of the small mid-January to late February bearish expanding wedge pattern, currently 107.72. Whilst overhead, we still have the capping resistance of the 50% Fibonacci line for 2023 at 108.64. For the moment, I will still keep highlighted in green the October 2023 to late January 2024 broken bull channel overhead, as I'm still wondering if the market will trawl along on the underside of this lower bull channel line, which is currently at 109.53. More immediately overhead, above the 50% Fibonacci line at 108.64, we have the short medium moving average, currently at 108.76, and that's highlighted in green on my daily chart. So far today, well, a higher open and a test up towards the 50% overhead Fibonacci line, but as yet not willing to really push it. Cable, aka sterling against the US dollar. A bullish thrusting pattern on Friday, with the market testing down to the 50% Fibonacci line of the July to October 2023 move at 125.90 and rejecting without touching it. Instead, prices rose up and tested the broken lower time, currently at 126.65, of the November-December 2023 sharply bullish shift pitchfork, highlighted in dark blue on my daily chart. The market didn't make it up through this lower time, but did close just underneath it. Further ahead, and not too far away, is the flatlining short medium moving average, currently at 126.73. The September 2020 low, 126.72, and a familiar resistance of the 50% Fibonacci line of the June 2016 to September 2022 move at 126.99, plus general congestion formed between December 2023 to January 2024 from the 126 area up to about the 127.75 area. Meanwhile, looking below the 50% Fibonacci at 125.90, there are reinforcements rising up to help support it in the form of the long moving average, and that's currently at 125.78, and the medium moving average currently 125.60. So far today, well, the market is fondling the lower time again and is capped by the combined short medium moving average and the September 2020 low area. Euro sterling. An interesting bullish engulfing pattern on Friday after the previous session's indecisive spinning top. Prices have tried rising to escape the December 2022 low 85.45, though the short medium moving average, currently 85.80, is still acting as an untested cap on the market, as it's done in a number of recent weeks. Overall, the market is in between the dark blue highlighted middle time below, currently at 85.30, and the upper time above, currently at 86.26, and that's of the November to December 2023 bearish shift pitchfork. We're also still well within the breach but not broken, small, purple highlighted, gently rising late January 2024 to date expanding wedge pattern, currently 85.22 to 85.98, which obviously also tempers any bearishness a little, and that's generated by that bearish shift pitchfork. Further down we have the bright red neckline, currently at 84.97, of the May to August 2022 head and shoulders continuation pattern. This is noteworthy as it had successfully held up prices mid-February, Whilst further overhead, well, we have three descending moving averages, the nearest being the short medium moving average, which is impacting right now, and the next being the slowly declining long moving average, currently at 86.09. So far today, we're a lower open, but well within the main body of Friday's action, and then, well, just indecision. US dollar against the Japanese yen. An inverted hammer pattern on Friday, but more importantly, we had a weekly key reversal down here last week, the first weekly key reversal seen here since early November last year. Despite this overtly bearish pattern, prices here are still settled within two major patterns, major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, highlighted in purple on my daily chart. We're in between the lower time below, currently at 143.60, and the middle time above, currently at 157.69. We are additionally very close to the middle time above, currently at 151.58 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. Now, so far today, well, a small dip lower, but then a recovery such that we're above the small main body of last Friday's action, and that's just about it. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday. Overall, the market still capped by the slowly rising long moving average, currently at 722.41. I'll get that right in a second, 722.41. Though the declining medium moving average, currently 720.60, is starting to act as a base for the market now. Okay, so I've said this before, but I feel prompted to repeat this here again. We have an unusual situation in the Chinese yuan, not because of the lack of movement, but because 2 weeks ago we had a weekly key reversal up in the US dollar CNY, the onshore Chinese yuan, the spot version, and at the same time we had a weekly key reversal down in the US dollar CNY, the onshore Chinese yuan again, but in the 1 year NDF. Seemingly we are undergoing some changes in the curve here, or there may be some positioning taking place in the timeline. Finally, I have now decided to highlight in dark blue the encapsulating action since mid-January today into what I suspect is an ascending triangle pattern. That's currently 719.43 to 723.52. I have no more to add at this time. And so far today, small move higher, but still within last Friday's action. US dollar against the Mexican peso. A second bearish black crow on Friday, and a follow-on lower to the previous session's immediate countering bearish double. After testing all of last week, Friday finally saw a break and close up below the support of the April 2016 low at 17.0389. The market was also capped by the flatlining short medium moving average, currently 17.0553, with further resistance overhead from the March 2016 low at 17.0923. Overall, we are still well within the highlighted in dark blue December 2023 to January 2024 mildly bearish shift pitchfork. This bearish shift pitchfork also accounts for the best overhead resistance, with the upper time above, currently at 17.2678, being aided by the adjacent long moving average, currently 17.2379, and the medium moving average, currently 17.2671. Meanwhile, below the April 2016 low, we have the middle time, currently at 16.9347, and some further congestion at 16.8897. I've said this next bit before, and I'll say it again. One could argue that the market is utilizing the middle and upper times of the bearish shift pitchfork as a de facto bear channel, and I would go along with that argument. Now, so far today, not much, a little lower, but still within Friday's action.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.